notwithstanding the unsavory confirmation that India is in a recession, the GDP data has provided, of course, a positive surprise this time around. The second quarter GDP at a minus 7.5%. In fact, many say that any data will look better than the kind of 24% contraction that we saw in the first quarter. How are you analyzing the first quarter GDP numbers?
Ruchi, the first thing I want to say that it's really quite meaningless to talk about technical recessions, because this is not a normal economic cycle. This outcome is not a result of macro or fiscal or monetary policies, etc., etc. This is something completely exogenously imposed on the economy, of which there was in some sense, could be no policy response, other than what we've done. So I think it's not right to talk about the recession bit. On the second quarter results, a very pleasant surprise, because everybody was expecting close to 9.5%, 10%, contraction, further contraction. So I think 7.5% is good, but I'm most pleasantly surprised with the manufacturing sector registering a positive print of, though low, 0.6%, but nonetheless, I think that's a very positive sign, which shows that the industrial sector, producing consumer goods and consumer durables, etc., has seen a demand improvement to which they have responded in this manner. Because I say this especially because this is end of September, and then the October is to follow, which will have further festival demand and the pent-up demand. So I think manufacturing will go up even further in October and November. So my own thing is that, and also within the core industries, there are, it's an overall 2.5% negative growth, but there are certain segments which in the month of October have now registered a positive growth over the previous October, year on year. You're talking about the power sector, we're talking about the fertilizer sector, we're also talking, I think, about one other sector, I forget, but three sectors have registered a positive year-on-year growth in October. So now I think, therefore, the second quarter GDP, performance points to the fact that we are surely, out of the woods.
Right.
The worst is behind us, and we can now we can now foresee the third quarter coming up to scratch, and then the fourth quarter producing a positive growth already. And so I think that's that. So it's a nice recovery. Yeah.
Right. Allow me to come in on that. If you look at the fine print, agriculture sector has shown a lot of resilience. In fact, it was in the positive territory for two consecutive quarters. Many say the manufacturing sector, the 0.6% growth that we've seen in the second quarter of FY21 is on the back of aggressive cost-cutting measures, a pared-down wage bill as well, and a benign raw material cost as well. Core sector data, if you look at it, that has come in yesterday, that's also pretty weak. In fact, minus 2.5%. I just want to understand from you, while yes, there is, of course, positive news as far as the second quarter GDP is concerned, are we in for a prolonged contraction?
No, not at all. I don't think so. I think the third quarter itself would see the end of contraction. May not be any significant positive growth, but the end of contraction, third quarter will see that for sure. And then the fourth quarter, we'll see positive growth, and we could see significant positive growth because unfortunately we had a weak fourth quarter in fiscal 20, the 3.2%. So you could see a sharp increase, and that will then become the basis for a very rapid recovery and growth rate, surely above 10%, if not even higher, in fiscal 21-22, because because of all the contraction now, that will be more than made up, or at least made up during fiscal 21. So you will see, I'm sure you will see a better recovery. So no prolonged contraction. The only issue is that some of the consumption demand could weaken in the coming months of December, etc. And for that, we may need, and the Honorable Finance Minister has said that she's ready to provide further stimulus to make sure that demand, the slackening of that demand doesn't take place.
Right. In fact, we will be talking about, this point that you've raised, that there could be a slackening of demand. In fact, a lot of people also are talking about it. But if you look at where India is faring as compared to the globe, besides UK, that has seen a degrowth of close to a contraction of 9.6%, the contraction in other global economies is far lesser than India, sir. I just want to understand, could this be probably because of the fact that India was anyway slowing before COVID-19 as well?
Not really, because my reading of the previous year's thing was that we were on the verge of, we were going to be bottoming out, and the fourth quarter last year was surely the lowest point of the cycle, and we would have improved since then. But yes, because there were these excess capacities, and because the economy was in that sense, trending downwards, the coming of the pandemic and then the forced lockdown, of course, meant that some of the activities suffered more than the others. But I think the overall there is no economic policy issue here. It's just that you had to you make the lockdown, and if you hadn't done that, then things could have been much worse than what they are today. And then thank God for that, what you've done. See, because even with what we have done today, you see that there is so much stress on the medical infrastructure and otherwise. That would have been unbearable at that time. So I think the only reason was the pandemic, and that's and the other part, of course, is that we have a very large unorganized sector, and unlike the other economies, and this unorganized sector, because it doesn't have a safety net, as it were, and these people are not sitting with large assets or cash reserves, they tend to, when there is a lockdown like that, their performance goes down quite heavily. So I think that's one structural reason for our rate of growth to have come down. Finally, of course, unlike the OECD economies, we don't have that kind of fiscal space. The public economy doesn't have the kind of fiscal space as was done in the US, UK, and all of Europe. That hundreds of billions of dollars were, sort of transferred to keep the demand up. We can't possibly do that because, for very well-known reasons. So I think those are the two structural reasons: the large preponderance of the unorganized sector, and two, our necessity to maintain fiscal balance, during this time.
On one hand, you're talking about the fact that we need to maintain fiscal balance. We are, of course, very close to the budget-making exercise as well. On the other hand, we're talking about that there could be a consumption slump as well that we will see, and that would need some kind of a push. How do you really strike the right balance?
Well, I didn't talk about a consumption slump, but, the fact that the pickup in demand, as you've seen during this, September, October, November months, may not be sustained, as it were. And for that, and I think to that extent, the balance has to be achieved, by, I think it's been achieved because, the fiscal gunpowder has been kept dry. There's some bit of conserving has been done. And now going forward, if we need the stimulus, I think then we should, for the moment, like all other economies, give less credence to maintaining the fiscal balance, and go out and make the expenditure. And my view has been that this expenditure should be focused on public capital expenditure, on projects, on areas which will improve productivity in the economy, and address some of the logistics constraints. And some of these can be short gestation projects, because if you do that, then you create a multiplier effect, which can sustain demand over the medium term much better than what just transfer payments do. So that's but short point. If as the Honorable Finance Minister has said, that if there is a need, then you would have to, in some sense, overlook the fiscal space constraint and come with the stimulus that is required.
Do you think any kind of a meaningful pickup in recovery could be thwarted just because we will see this consumption getting petered out in the next few months?
No, I don't think so at all. Because the Kharif crop has come in, it's very robust. The procurement has been 18% higher. You've also seen that I was talking to some people in the hospitality sector, and the good news there is that the luxury segment of the hospitality sector is now already seeing 60% plus occupancy, because Indians unable to travel abroad are now traveling to these destinations within the country. So there's a demand pickup there already in that sense. The manufacturing, as I said, already got a positive print. The services sector, which is the weak and which has seen an 11% decline in the second quarter, I think that is where demand is more likely to pick up, because as the lockdowns ease further and as the pandemic slows down further, because people's travel and people's and restaurants and trade and will open up. So I have no fear at all of there being a severe demand contraction, which will in some sense stop the recovery. Not at all. I think we are in for a better and stronger recovery as we go forward. Plus, let me also say one other thing, which is that the government is now taking very focused steps to improve investment in the economy through the production-linked incentive scheme. So if that investment comes in, as has come with Apple, for example, and several of its component producers announcing large investment, so that will shore up investment demand. And if we get our act together, which we are trying very hard, if we can ramp up our exports, then we can take advantage of the external demand, and which again will further complement the overall demand expansion in the economy.
Do you see an upside to the RBI forecast of minus 9.6%, 9.5% that they have for the full year?
I think we'll be pleasantly surprised, and we will get a lower contraction overall in fiscal 2021. But again, I think no reason at all to get complacent, no reason at all, but at the same time, no reason at all to start sounding ominous warnings. I think we are on the right track.